Good afternoon, everyone. This is Henry, and as we head into trade on Thursday, I wanted to give you a few things that I'm looking at to getting prepared for the expiration this week. And really, it starts off here with the put call reading. So I cover this often with you through these free videos, and I believe you can see how effective it can be, right? If you note these days right here, this is going to be the 8th and 9th. So in these bars, what we're seeing is exaggerated put buying, right? Values above 1.0 or what I'm looking at on an intraday, but then also on a closing basis. So if we see that there was so much activity in put options, and we're assuming that, a fair deal of that is retail buying those puts, it really helps explain the advance that you saw, right? And think about this, where you saw the 8th and then the 9th. Those are the 2 days where that put call was really starting to rip up higher. And then look at what the move ended up being. It's an explosion higher. So that just shows you everybody that was buying puts on a pattern that looks so bearish, you can see how that played out. Then you have the move into the other end of the spectrum, right? This was just yesterday. And I believe is a big contributing factor to the weakness that we've seen, because when you get the PPI data, the market gaps up, everything looks so bullish, everyone turns bullish, and then all of those purchased calls shows up here with an extreme put call reading on the opposing end. And then to try to bring all of this full circle, again showing you extreme examples that have given us tradable signals this week. And then as you look at this heading into Thursday, thinking, you've got a pretty heavy interest here in puts that have been purchased, and I believe one or two things are going to happen. Either you're going to gap lower tomorrow, and everybody that's short will get paid, and then the scenario won't work out exactly like I'm trying to explain it to you, or you'll get the other end of it, where you see a gap higher, and then we're on the path to taking the SPX back into 4,000. So around these monthly expirations, it's just one of the forces that you can see in the markets that like to grind up into these large psychological values. So I'm thinking maybe bears got a little ahead of themselves on this weakness. Rotation back up into 4K would make sense with a high put call reading, but I am evaluating this on a day-to-day basis. If that put call does not give us any kind of a bounce, the mean is a good way back down there, and I don't want to be fighting that. So again, focusing mostly on those signals for the next 2 days, being aware of how far the reversion to the mean would be, and that's what I'm going to be using to set up my monthly expiration. So I hope it's helpful, gives you a few good pointers. You guys trade well, and we'll see you at the next free video. Hey traders, this is Henry with simplertrading.com. I wanted to thank you for watching today's video. I hope you found it helpful, and if so, be sure to click the like and subscribe buttons down below. If you would like to also see me putting these ideas into action and trading my own account live in front of you, be sure to sign up at simplertrading.com, and I hope to see you in the chat room sometime soon.